Okay, let's start the class. While we get the admin to give me permission to share my screen. I can't share my screen now, but hopefully the admin will join and give me permission to share my screen. Okay, today we're going to be looking at the concept of trading profit and loss adjustments and what does that mean. Now, for all our tax that we prepare, there's what we call taxable profits and accounting profits. So most of the financial statement that you see, you will always see accounting profits in it. When you prepare your financial statement, the financial statement is prepared based on the generally accepted accounting principle, based on international financial reporting standard, based on internal statement of accounting standard. That is what you usually prepare your financial statements with. Meanwhile, in tax, when we are preparing our schedule or when we are preparing our tax liability to ascertain our taxable profit, the basis of our computation is always on the Tax Act. Therefore, there is going to be difference between the taxable profit and accounting profit. Why is there a difference? The reason for the difference is because of the different bases in which the person preparing the statements had used. So the person preparing the financial statement would have used the accounting standard in preparing it. Meanwhile, the person preparing the tax statements would have also used the company's income tax or the tax act to provide to prepare the tax liability. Therefore, if that is the case, the profit of a taxman will be different from the accountant because it's not going to be the same because they have also used different approach in ascertaining their profit. So if that is the case, now that we know that they have used different bases in ascertaining their profits, the next thing for us to look at is our adjusted profits. What do we mean by adjusted profits? In company's income tax,
Hello,
adjusted
sir.
profit is
Sorry, sir.
from accessible profits.
Hello, Mr. Chris.
Not different
Sorry.
from accessible profits. And what is accessible profits? An accessible profit is a profit of the company from all sources. I'll say it again. What is an accessible profit? An accessible profit is a profit of the taxpayer from all sources in the year of assessment. And this will be done before adjusting for balancing charge and before adjusting for any loss and before adjusting for capital allowance. You remember in our last class, we talked about loss relief. And what is loss relief? We said loss relief will occur in a situation where a taxpayer has a profit, has a revenue that is lesser than cost. That is, the cost of operation is higher than the revenue of the company. And if that is the case also, that means the taxpayer will be running into loss. There is a provision in the tax law that says when a taxpayer incurs loss, such a taxpayer has right under the tax law to relieve the loss against the income of the company. That is the subsequent profit of the company. Now, this profit that we are talking about is the accessible profit of the company. And you remember, I just told you now that accessible profit is a profit of the taxpayer from all sources. Okay, is a profit of the taxpayer from all sources. So that means the taxpayer has income from abroad. The taxpayer would bring the income together, and such an income would be okay, the admin will be joining us soon so that it will give me access to share my screen. Okay. Sorry
Before this,
for
Sorry, sir. Before then, can you send the material to our WhatsApp group?
Fidelis, can you speak up? I can't hear you clearly.
All right. So, sir, before then, can you send the material to our WhatsApp group so we can have access to it?
Fidelis, you are not speaking. You remove, if you are using headsets, remove it and speak directly to your mic.
Hello, sir. Can you hear me now?
Okay, I'm hearing you. I can hear you.
I was suggesting that you can send the material to our WhatsApp group so we can have access.
Okay, I'll do that.
All right. Thank you, sir.
All right. And I have the permission to share my screen so you guys can see my screen now. Let me know if you can see my screen.
Yeah, we can see it now.
Good. All right, let's go ahead. So as I was saying the other time, you remember I told you that the reason for adjusting our profit is because the profit of the taxpayer is not going to be the same as a result of the fact that the taxpayer is using the Tax Act as a basis of computation of his tax liability. Meanwhile, the financial statement that we are preparing, we are using the generally acceptable accounting standard to prepare it. So, and I've said, what is your adjusted profit? I told you adjusted profit is the same thing as our assessable profit under the Companies Income Tax Act. And by implication, I said an adjusted profit is a profit of the taxpayer from all sources. Income that the taxpayer generates from all sources is what we call our adjusted profit. Now, how do we know that some expenses are liable? And that is what is going to take us to tests of acceptability of expenses by the taxpayer. The first one that we're going to be looking at is when you're talking about an allowable expenses. And allowable expenses are the expenses that are wholly exclusive, reasonable, and necessary for the purpose of generating taxable income. I'll say it again. What is an assessable profit? An assessable profit is a profit. What is an allowable expenses rather? An allowable expenses is the expense that is wholly exclusive, reasonable, and necessary for the purpose of generating taxable income. When you talk about wholly means that all the expenses, the entire expenses must be incurred solely for the purpose of the business. That is, the business is not sharing the expenses with any other business. So that means the expenses is generally incurred for the purpose of the business alone. Okay, that is only the entire amount is expended for the business. The next one, exclusive. What do we mean by exclusive? We say when an expense is exclusive, that means the business alone benefits from these expenses. The business alone benefits from these expenses. That is what that means. The next one is reasonable. An expenses is necessary rather. An expense is necessarily incurred if the business cannot derive the income without incurring the expense. That is, you cannot derive income without incurring the expenses. Let me cite an example for you here. Now, as a network as a company will not be able to generate income if, for example, we do not subscribe for Zoom app that we are using to lecture you now. So that means that expenses is necessary for us to be able to generate taxable income. Another expense that is reasonable for us to be able to generate taxable income is internet in this space. Without internet, I won't be able to pass this information I'm passing to you. That means without incurring these expenses, we cannot generate income as net worth. So for us to be able to generate income, we must, by all means, incur these expenses. If it was to be physical class, what are the expenses that we need? We need marker. Those expenses are very, very reasonable for us and necessary for us to incur. So that is that. The next one is reasonable. When you talk about reasonability, we look at a lot of things. You have to compare the costs to what you have incurred last year. Take for example, last year you have incurred 10 million for a particular expense rather. This year, you are now saying you are going to incur 200 million. That expenses becomes irrelevant. Or sorry, not reasonable at that point. Again, we also look at the materiality of the costs. We look at the practice in the industry. We look at the general business environment. So those are the things that the tax authority looks at before allowing expenses. Now, when I now say what is allowable expenses, what are allowable expenses? Allowable expenses are the expenses that are, look at my statement now, I have put are. The other one I said that are not, this one it is that are reasonable, necessary, exclusive, and wholly for the purpose of generating taxable income. Those are allowable expenses. Allowable expenses are reasonable, they are necessary for the purpose of generating taxable income. When you look at this format, we are just seeing our profits. The first we're going to usually start from is the net profit. That is, we are trying to the profit that has been prepared based on the International Financial Accounting Standard, based on IFRS, based on GAAP. You want to adjust profits. Therefore, you will say your net profit. Okay, you will say your net profit, add back non-allowable expenses. You add back non-allowable expenses. After that, you also add back taxable income omitted. There are some income that are supposed to be taxable, but mistakenly or erroneously or intentionally omitted by the taxpayer. This income shall be added back. Apart from that, we talk about non-taxable income included. These income are not taxable. Example of non-taxable income is dividend, interest on treasury bills, promissory notes. All those are not taxable income. Okay, so we are saying that if a taxpayer generates a non-taxable income, that non-taxable income is not going to be what? Taxable. Therefore, it has to be deducted if it has been recognized in the income statement before now. So it has to be what? Deducted. The next one is allowable expenses omitted. The expenses are allowable but omitted. That is, it's supposed to be deducted, but it was not deducted before presented in net profit or the account. Therefore, the taxpayer has right to deduct such an expenses. So we now move on to types of non-allowable expenses. Types of non-allowable expenses that you could see in the exam. Okay. The first one here is the capital expenditure. What do you mean by capital expenditure? A capital expenditure is the expenditure that its lifespan goes beyond 1 year. Okay. The lifespan of the expenditure goes beyond 1 year. And you remember, when you are preparing your income statements or your profit and loss accounts, you do not recognize capital expenditure. The only thing that you recognize in your income statements is your revenue, your recurrent expenditure. Okay, So if you see any capital expenditure in your income statement, such is not going to be what? Allowable. That's number one. Now, I will also expatiate more on this capital expenditure. Note, I hope you guys are jotting. It's not just to be listening. You are supposed to also be jotting. Under capital expenditure, we have what we call overhauling of fixed assets or refurbishment of fixed assets. What do you mean by overhauling? Overhauling means you are replacing an essential part of the assets. Okay? You are replacing an essential part of the assets. That's what we mean by overhauling of fixed assets. Okay? So what that means is that, say for example, you have a motor vehicle. You now replace the engine of the motor vehicle. That means you have overhauled the assets. That overhauling of fixed assets will be capitalized. So if you see overhauling in your statements, it is going to be disallowed. The next one, any cost incurred prior to the usage of the assets shall also be capitalized. Take for example, one of these costs that I'm talking about here is, imagine you bought a motor vehicle, and that motor vehicle that you bought, you have to pay custom duty, freight charges, and some other things like that. Now, the fact that you have to pay custom duty and freight charges, those costs are going to be capitalized. Any cost also that you incur in installing the assets, you buy, let's say for example, you bought generator. You now incur costs in installing that generator. Okay, it is not going to be expensed. Such costs shall be capitalized. Such costs shall be what? Capitalized. That is that. But however, if you incur any expenses or any costs in maintaining the assets, in repairing the assets, such cost of maintenance or repairs shall be allowable. I'll say that again. Any cost of maintenance, any cost of repair of the assets shall be an allowable deduction, provided such costs are not incurred prior to the utilization or usage of the assets. That is that. That is that. The next one is your private expenses or personal expenses. Private expenses are not allowed for whatsoever reason. If you incur a private expenses, such shall be disallowed and added back to the income of the company. The next one, provisional item. In tax, we don't make provisions. You have
Hello,
a
sir.
question? Yes, go
Yes.
ahead.
When you talk about private expenditure, in the case where the board of directors have decided that the school fee of the children of the directors or one of the chairman or one of the board of the directors should be paid by the company, will that such expenditure be disallowed?
That is benefits in kind. And that will also form part of the emolument of the director. Okay?
Okay. Okay.
So if the examiner goes as far as now breaking it down, do you understand me? If the examiner goes as far as breaking it down, such will be disallowed. If you see director's emolument is allowable, but when they now begin to break it down, that you pay for your school children fee, you know, all those things, that will constitute benefits in kind in the hand of the director, which will be taxed by personal income tax, not company income tax. Do you understand me? So we move ahead.
Yeah, clear, sir.
Yeah. The next one is depreciation. Depreciation is not allowable. We are going to discuss extensively about the depreciation in our next class. And that is capital allowance versus depreciation. We are going to discuss extensively about that. Now we're talking about depreciation. Depreciation, as we all know, is the spread of the historical cost of the asset over the estimated useful life. Okay. Now, when you look at depreciation, for example, assuming two companies acquire the same asset and put into production use on the same day, there is every possibility that the two companies will not be using the same method of depreciation. And also, there is also possibility that the two companies will not be using the same depreciation rates. And depreciation rate and method depend on the accounting policy of the company. Therefore, if that is the case again, the implication of that is that you will not be able to put the same different taxpayer on the same pedestal. You will not be able to compare them. And you need to always be able to compare your taxpayer so that we'll know that, okay, this taxpayer that have incurred this capital expenditure is paying or is deducting the same amount of depreciation. If that is the case, that was the reason for the introduction of capital allowance. Capital allowance is allowance granted in lieu of depreciation. That is, instead of granting depreciation, you grant capital allowance. You allow capital allowance to be treated as deduction. Okay, so depreciation is not allowable deduction. We move on to the next one. Food in form of entertainment, liquor, wine in form of entertainment are not allowable. Legal expenses. Ordinarily, legal expenses are allowable, provided that the legal expenses is incurred with respect to settling disputes between customers, provided that the legal expenses is for cost of agreeing tax. Those are allowable. Any legal expenses that you incur in tax appeal, I expect that you guys are jotting. Any legal costs you incur in form of tax appeal, whether the legal expenses, whether the appeal was successful or not successful, it is not allowable. Let me say it again. Any cost you incur in tax appeal, okay, tax appeal, you know, you have the taxpayer, the tax authority has said you're going to pay this total amount. You now said, no, I'm not going to pay. You now took the tax authority to court, or the tax authority took you to court. You now file for an appeal. You now won the case. Whether you win the case or not, such is not an allowable expenses. Do you understand me? Such is not an allowable expenses. The next one. Under the legal cost, any cost incurred in renewal of short-term lease is allowed. Renewal of short-term lease is allowed. Meanwhile, renewal of long-term lease is not allowed. Renewal of short-term lease is allowed. Renewal of long-term lease is not allowed. Again, any costs you incurred for the purpose of acquisition of long-term and short-term lease are not allowed. I'll say it again. Any cost incurred by the taxpayer for the acquisition of long-term and short-term lease are not allowed. That is that. Fictitious assets are not allowed. Example of fictitious assets are intangible assets such as goodwill, trademark, patent rights. All those are not allowed for the purpose of taxation. The next one is losses recovered under insurance or other contract of indemnity. Such are not also allowed. And next one is loss on disposal of fixed assets. Loss on disposal of fixed assets is not allowed. Loss on disposal of fixed assets is not allowed. Second one. Loss on disposal of fixed assets is not allowed. The next one, yes. The next one is payments on unapproved pension provident, savings or widow and orphan security society fund. are not allowed. So when you make a payment to a pension fund that is not recognized by law, it is not allowed. The next one, loss on investments. Loss on disposal of investment is not allowed. Any withdrawal of capital sum is not allowed. That is withdrawal, drawings is not allowed. Defalcation, stealing of money is not allowed, because the expectation of the act is that you must have incurred you must have secured or insured your business in terms of any defalcation. You can get your money back from insurance. Staff loan written off, you are no. So staff loan written off is not allowed. The next one is customer loan written off. You cannot write off loan of customer. You can't write customer's loan off. You can't write customer's loan off. It is not allowed. Give me a sec. Can you still hear me?
Yeah, we can hear you. We can hear you. Your line was
Okay.
breaking initially.
Or you can hear me now. The next one
Yes,
is
sir.
preliminary. You can hear me now, right?
We can still hear you, sir.
Okay, good. The next one is preliminary expenses. Preliminary expenses are the expenses you incur prior to the commencement of your business. Such is not allowed. Stamp duty is not allowed. Appropriation items are not allowed. Example of that are dividend, taxation, transfer to reserve are not allowed. We have talked about leases, acquisition of new lease, whether short term or long term, are not allowed. Renewal of long term lease is not allowed. Renewal of short term lease is allowed. The next one, any form of taxes are not allowed. Any form of taxes are not allowed. Subscription to a recognized trade associations are allowed. Meanwhile, subscription to unrecognized trade associations are not allowed. When you make subscription to professional bodies such as ICANN, such subscriptions are allowed. Okay, so that is that. Bad debt. Bad debt is allowed provided we have the following. Provided we follow the following. Number one, it must be trade debt. Before you can say you are writing on the debt, it must have been included as part of sales in the year of occurrence. The taxpayer must have also taken every reasonable steps to recover the debt. You must have taken all steps. And if you are not able to recover it, then we can say, okay, we can write it off. The next one, no portion of the debt must have been deducted in the previous accounting year. And the next one is, before you can say a debt is bad, you must have also had a conclusive litigation on it. You've taken the person to court, you've tried to recover your debt, all efforts where you were not able to get it done. Then you can let it go. The next one is donation. Donations are only allowable to the bodies listed in Schedule 5 of CETA. We are going to be sharing that with you. So, but the ways you can use to identify that is that when you make donation to, most of the tests the examiner usually give is donations to maybe political party. When you make donations to political parties, such donations are not allowed. Such donations are not allowed. When you make donations to university, it is allowed. Educational institutions are allowed, and so on and so forth. The next one is expenses incurred in deriving.
Sorry, sir. Sorry, sir. Political bodies are registered political parties now. So why are they disallowed?
Thank you for asking this question. Political parties are not part of the bodies listed in the schedule, company's income tax schedule. Do you understand? That is why it will not be allowed. They are not listed as part of the body. Even though they are registered in Nigeria, yes, we know they are registered, but they are not listed as part of the bodies in which a company can make donations to. Do you understand?
All right, sir. Yeah, appreciate you.
The next one is I talked about expense incurred in deriving tax exempt income. There are some income that are exempted from tax. There are some income that are exempted from tax. Now, because these incomes are exempted from tax, any expenses you incur in generating income that are exempted from tax will not be allowable. Do you understand? So let's quickly move on to the next one. We also have what we call bad and doubtful debts. Now, when you say doubtful debts, these are debts that you are doubting that you might be able to recover. Basically, the taxpayer can make provision for these doubtful debts. But when you're making provision for these doubtful debts, be sure and be ready to make provisions for the ones that you can trace. And that is what we call specific debts. We have two types of debts. We have what we call the specific debts and the general debts. A specific debt or a specific debtors are the kind of debtors that you can trace. You know them, you can trace them. If they are owing you, you can easily trace them. Okay, those are specific debtors. When you're talking about general debtors, these are the debtors that you cannot trace. Therefore, you cannot make provision for such debtors. Do you understand? And one of the things that banks does recently, or banks do, is that banks usually register their customer. And they also have what we call KYC, know your customer. So, and that is why if you open a bank account today, banks will go to your house, the address you gave them, they will ask you for landmark where they can actually trace you to. Okay? They will go there, ask a few questions about you, whether you are staying there or not. Okay? So that is the reason why they are doing that. So yeah. So they will say, yeah, know your customer. It's very important. Okay, that is the reason for doing that. So specific debts, when you make provision for specific debtors, you can, it is allowable. Meanwhile, when you make provision for general debtors, it is not allowable. It is not allowable. The next one is income omitted. So we have said income omitted, they are supposed to be what? Added back. So we move on from that. Non-allowable income. What are the examples of non-allowable income? The first one is sales of fixed assets. When you make sales of fixed assets, when you dispose fixed assets, any income that you make on that is not taxable under company's income tax. It's not taxable under company's income tax. However, it is taxable under it is taxable under capital gains tax. It is taxable under capital gains tax. It is taxable under capital gains tax. That's number two is sales proceeds on investments. When you make an investment and you sell, you make profit on the investment, it's not allowed. The next one is profit from disposal of fixed assets is not allowed. Dividend, just as I have told you, is not allowed. Reversal into income of previously disallowed expenses. That is, example of this is decrease in provision for bad debts is not allowed. Next is dividend, interest, royalties, derived by a company operating outside the country and brought into Nigeria through government approved channel and brought into Nigeria through government approved channel, it is not a taxable income. It is not a taxable income. It is not a taxable income. That's that. The next one, any exempted income exempted from tax, it is not allowable. It is not allowable. Okay. Give me a few seconds. I need to quickly attend to something. Prosper, did you hear me? Good. Good. All right. I'm sharing my screen.
Yes, sir.
Okay. Sorry for the break in transmission. I quickly need to attend to something. So I was saying the other time that any exempted income, tax exempt income, will not be allowed, will not be taxable income. Now, I also want to quickly give you allowable expenses, example of all allowable expenses. So, number one, the interest on loan obtained for the purpose of trade or business is allowable. You see that, allow it. The next one is rental of premises. Allow, repair, allow. Unrecoverable debts, allow, that is bad debts. Contribution to approved pension fund, on for that man, allow. The next one is donation to accredited bodies, allow. Rental charges, allow. Professional charges, allow. Cost of gift to customers, allow. etc. There are so many. There are so many of them. So we are quickly going to be looking at an example, illustration number 2 in our study pack today. Illustration number 2.
So I have a question, please.
Yeah, go ahead.
So the company income, is it taxable before the payment of dividends to shareholders or after payment of dividends to shareholders?
Company income is taxable before payment of dividend.
Okay.
It's taxable before that. So when we get to company's income tax, I'm going to be exposing you to some things that you need for this class. Okay, let's go ahead. Let's read this question together. So please follow me as we go ahead. Mr. Bank Olemo, who worked in a neighboring African country for many years, returned to Nigeria in August 2018. He incorporated a private limited liability company known as Bank Moon Limited, located in Lagos on October 30, 2018. The company deals in processing and packaging of plantain chips for local consumption. The directors of the company opened a business bank account with one of the leading commercial banks in Nigeria in November 2018. The company commenced full operation on January 2nd, 2019. Your firm, Shomeninu & Co., was appointed as a tax consultant to Bank Moon Limited in January 2021. At the first engagement meeting with the company, we discovered that the company is yet to register with Federal Inland Revenue Service. Relevant taxes has not been paid, including VAT, were not remitted to FIRS. They're not remitted to FIRS. So we are given the extracts. We are given the extracts of the first set of account of the company as at 31st December 2020. As at 31st December 2020. So we are given gross turnover, 862,50,000. Gross profit 307, 734. 307, 734. Profit on disposal of plants, property, and equipment, 7,860. Is that a taxable income or not?
It's not.
It's not a taxable income. We have discussed that. It's not a taxable income. Next, we move on. Deduct administrative expenses. Deduct administrative expenses. We are given the administrative expenses. We have salaries and wages, director's remuneration, electricity and generator running expenses, rent and rates, renewals and repair, motor vehicle expenses, donations and subscriptions, interest and bank charges, bad debts, miscellaneous expenses, loss of fund, audit fee, legal fee, depreciation. Additional information. Additional information. The following additional information is provided. Donation and subscription includes Lagos Chamber of Commerce. Is that an allowable expenses or not? Is that an allowable expenses or not? To Lagos Chamber of Commerce, is it allowable?
Allowable.
Good, allowable. Motorboat Club, allowable or not? Allowable or not?
Non-allowable.
Good, not allowable. Next, Polo Club, allowable or not?
Not allowable.
Good. Political parties donation, allowable or not?
Not allowable. Disallowable.
Good. Approved National Relief Fund, allowable or not allowable?
Allowable.
Allowable.
Good.
One have you back. Keep it for never.
You are not talking. Mute your mic. Mute your mic. It's not a good etiquette. You are in class or you are to distract others. So the next is number 2. Number 2. Bad debts consists of the following: allowance for doubtful debts, allow or disallow. Allowance for doubtful debts. When you see allowance for doubtful debts, not allowed. Not allowed.
Disallowed.
The next,
Disallowed.
allowed. Good. The next one, specific provisions. Is it allowed or not allowed? Allowed. Good.
Specific. Allowed. Yes.
Yes. The next one, court's fine. Court's fine. Allow or not allowed?
Disallowed.
It's allowed. Exchange loss or remittance and balances. Allow or not allowed? That would be allowable. And every other thing there, they said allowable. Thank you. We move to the next one. Loss of fund. Now, that loss of fund, they said it was the director of the company defrauded the company to the tune of 9.8 million. Allow or disallow?
Disallow.
Disallow.
Allow. The next one, legal expenses, debt collection and retainership fee. Allow or disallow? Debt collection and retainership fee. allowed or disallowed?
Allowed.
Allowed.
Allowed. You know what we call retainership fee? When an auditor or you have a legal advisor in your company, every year you must always pay them a certain amount of money to show that they are still working for you, to keep them in your business, to keep them as advisory to you. So you must always, at every point in time, maintain this kind of people. Okay? The next one.
But sir, this court fee that you said it's allowable, there was a clause to that when you were explaining.
Yeah, go ahead. What is a clause?
So what happened that they are paying court fees or court charges? Was
So
it
I
that
told I told you something about when the court fee that you are paying is for the purpose of tax appeal. We have said tax appeal. We have said tax appeal is not an allowable expenses, whether it is a successful tax appeal or not successful tax appeal. Okay? Whether the appeal is successful or not, it is not allowed. That was what I said. Okay?
Okay, sir.
All right. So land acquisition, any cost you incur, legal fee that you paid on land acquisition, is it allowed or not allowed?
Not allowed.
Is it allowed? No, not allowed, because acquisition of land is capital. So any cost incurred on that, it is not also a liable deduction. Okay. You are required. The examiner said, what due date of filing audited financial statements to tax office? Now, when you want to file audited financial statement to the tax office, so if the company is a new company, okay, if the company is a new company, such a company must file its returns within 6 months, within 18 months after the date of incorporation. Within what? 18 months after the date of incorporation. That is, when a company is registered and the company commences operation, the company must file its returns within 18 months after the date of incorporation or within 6 months after their first accounting year end, whichever comes earlier. Now, what about a company that has been in business for so many years? A company that has been in business for so many years must file its returns within 6 months after the accounting year end. So that is that.
So, sir, sorry, sir.
Go ahead.
Is it applicable to people that operate just a business name? It's not a full-fledged company.
No,
Or they have a business.
business name is governed by personal income tax, not by company income tax. It's not applicable to them.
Okay, sir. All right, sir.
Thank you. So the next one is the examiner says, state the basis of assessment for companies that just commence business. Basis of assessment for companies that just commence business. Who can help us with that? We have done commencement rule in this class. Who is helping us with that? When a company commences operation, the first tax year will be assessed to tax from what date to what date? Who is telling us?
You know what?
Okay. Let me tell you straight. When a company commences operation, such a company shall be assessed to tax from the date of commencement to the end of the first accounting year end. That is the first one. The second one shall be from the date, a day immediately after the end of the first accounting year end to the end of the second accounting year end. And the third tax year shall be a date immediately after the end of the third tax year, a date after the end of the second tax year to the end of the third tax year. We have talked about this before. So now, we now need to compute our adjusted profit. That's what the examiner asks us to do. Adjusted profit is also computed on preceding year basis. How do you do your adjusted profit? The first thing that you need to do is to start from your net profit. Start from net profit. So look at the net profit that we are given. In this case, we are given net profit of 42,264,000. Now, note something. When examiner gives you question on the examination condition, they will put the value in the body of the question to be 1,000. Look at this one is in 1,000. In the additional information, at times they will also put it in 1,000. But you have to be very careful. You remember this loss on fund, they put it in absolutes. This means 9,008 because you'd have put your values in 1,000. So you first start with your net profit. It is the net profit we want to adjust. We'll start with the net profit. You will add non-allowable expenses. That is all the disallowable expenses that we have identified. You will add it back. We add donation, motor club, political party, allowance for doubtful debts, 6,600 court fine, the director's fund, depreciation, and land acquisition. This depreciation. So after you are done with your adjusted your additional information, the next thing that you also do is to go back to the body of the question. Now, in the body of this question, if you look at it very well, you will notice that every other information here, they are liable or we have been given additional information with regards to them. Interest on bank is allowable. Miscellaneous expenses, we have been given the details. Audit fees are liable. The only thing that is not allowable in this our template is depreciation. So the depreciation will also be added back. Apart from depreciation, this profit on disposal of fixed assets is not also taxable. Okay? And meanwhile, it has been used to increase our net profit. What do we do to sort that? We are going to remove it. So let's go back to our solution. Our solution. So you see, we said remove non-taxable income, which is this. So at the end of the day, you will get your adjusted profits. And this adjusted profit is a profit of the adjusted profit that we have used the tax laws to identify. Do you have any question for me?
Yes, sir. So I saw something like capital allowance.
Yeah, for the purpose of this, capital allowance is not relevant for now.
Okay.
When we get to company income tax, that's what we talk about, capital allowance.
Thank you.
Yeah.
Okay, that's the first question. Let's look at the second question. Let's look at the second question. Any other question before we move to the second question? I'm going to forward this thing to you immediately after the class. I'll forward the material to you immediately after the class. And you can also still look at, watch the video. You can also still watch the video. Okay, we go again. The next one here is Fortune Nigeria Limited. A reputable soap making company is based in Lagos and registered over 10 years ago. The financial year end of the company is 31st December of every year. The company financial position for the year ended 31st December 2017 was as follows. We are given. We have turnover, less cost of sales. We have gross profits. We have gross profits. We have other income. And the addition of these two gave us 37,750,000. We move on to the next one. We have director's remuneration, salaries and wages, rent, advertisement. All those expenses are liable. Traveling expenses, postal and communication expenses are liable. What's it called? Public relations expenses are liable. We move on to the next one. Sundry expenses, rent, repairs and maintenance, depreciation is not liable. Gift and donation, we need to go and see the combination of the gift and donation. We need to see what is inside. Subscription, we need to also check it. Cleaning expenses are liable. So we are given the additional information. They said included in the other income was the sum of 850,000 and as disposal of fixed assets. Is that a taxable income or non-taxable income?
Non-taxable income. Non-taxable income.
Not taxable income.
Non-taxable income. What do we do to non-taxable income?
With
The
the
add
dogs.
back.
With
The
the
dog.
dog. It's saying add
Yes.
back. The dogs.
Mm.
The next one is salaries and wages included housing allowance of 10 senior staff who were paid the sum of 200,000 each per annum. Is that relevant for this information? It is not relevant. It is allowable. Now, even though this housing allowance will be subject to tax in the hand of the person that we paid it to, will be subject to tax in the hand of the individual taxpayer. But as a company, it is allowable expense to the company. But in the hand of the person that we paid it to, it is a taxable income. Just like the question the other guy asked me the other time, that the directors' emoluments, when they are paid their salary and some other allowances, to company will treat it as allowable expense to the company. Okay? Meanwhile, in the hand of the directors, it is going to be treated as taxable income, which will be subject to tax in their hand. Okay? And that is going to be under personal income tax. The same thing will be applicable to this. The next one is 1/4 of the expenses or rent was paid on the apartment occupied by the father of the managing director. That is not allowed. It's a private expenses. We have talked about this before. That is not allowed. The next one, half of the advertisement's cost was incurred on sponsorship of television program where airtime was allocated for promotion of the company's products. Is this an allowable expenses or not allowable expenses?
Not allowable.
Why won't you allow it?
Allowable. It's allowable.
It's
Allowable.
allowable.
It's allowable expenditure.
It's allowable expenditure
It's
because
allowable.
the expenditure was
Promotion.
used to sponsor the company's
Promotion.
products.
It's allowable.
Allowable, good. The next one is public relation and entertainment of 3,150,000 included the sum of 380,000 paid as commission to sales agents. Is this allowable expenses?
Allowable.
Allowable. When you are promoting your products, you have a sales agent that is going about helping you dispose or sell your products. Any cost you incur, it is going to be allowable expenses. The next one, the breakdown of miscellaneous expenses is as stated below. Breakdown of miscellaneous expenses are stated below. Number one, cost of computer hardware. Is it allowable or not allowable? Cost of computer hardware, is it allowable or not allowable?
It's not allowed.
Okay, thank you, Favor. Why is it not allowed?
I think it should be capitalized, sir. I don't know.
Solid student, it is going to be capped. That is why it's not allowed. Furniture and fitting.
Not allowable.
Is
Capitalized.
furniture and fitting allowed?
No.
No, sir, it's not allowed.
It's not allowed.
Not capitalized. Cost of fuel and lubricants allowed. Believe. Cost
Yes,
Expense.
sir, allowed.
Expense. Yes, allowed.
Allowable.
Judith, not allowed. Solid student. Judith, you are a very solid. Next, printing and stationery.
I said it's
Allowed
allowed
or not
now.
allowed?
Allowed.
Fidelis. So that is that. The next one, they said, yes, allowed. The amounts incurred as gift and donation included the following: donations to Egba community for town hall
And we can't.
development. Allowed.
Scroll your screen up. No,
Can you see it?
no, you can't see it.
Not here, sir.
Can you see it?
Yeah, we
Okay,
can.
we can. Yes, sir.
Good. Good. So, donation to Egba community for town hall development. Is it allowed? Can we make this kind of donation?
Not
Not
allowable.
allowed. Not allowed.
And can't
Not
we say
allowable.
it's a CSR? What do you think?
No.
Sir?
Good.
No.
It is not allowed. It is not allowed. It is
Hmm?
not allowed. Next, donation to University College of Ibadan. Allowed or not?
Not allowable.
Allowed.
Is allowable. Gubernatorial candidates for electionary campaign. Is it allowable or not allowable?
Not allowable.
Not allowable.
I can justify that this is allowable. But it's not allowable. I'm
How,
just
sir?
kidding. It is not allowable. I'm just kidding. You know, when you are in business, for example, you know that Tinubu is going to win. You are now, you did something for him so that by the time he wins, he will give you contracts. That might be the basis for you doing it. But again, it is not an liable deduction. Do you understand me? So that is that. Breakdown of amounts paid as subscriptions as follows. Number one, subscription of staff to the Institute of Chartered Accountants of Nigeria. Allowed or not allowed?
Allowable.
Allowed.
Good. Allowed. Next, subscription to recognized trade association. Allowed or not allowed?
Trade associations.
Allowed.
Allowed. Allowed.
And the qualification. Recognized trade association. Allowed. Next.
Yeah.
Subscription of staff to Nigeria Institute of Management. Is it allowed or not allowed?
Allowable.
Allowed.
Allow it. We are going to allow it. So let's go and adjust the profit. The first one, the first thing that we're going to do is to take our net profit, right? Net profit. The next one is to deduct non-taxable income. Our non-taxable income in this scenario is 850,000 deducted. The next one, you remember we talked about the rent. We said rent, 1/4 of it was occupied by the managing director's father.
Profit.
That will be allowed, right? Next one, cost of computer hardware, that is capitalized, will be disallowed. Furniture, disallowed. Depreciation is disallowed, right? Donation to Egba Community Town Hall is disallowed. The next one, gift to gubernatorial candidate is disallowed. So when you disallow that, when you add all those back, you have your adjusted profits. You will have your adjusted profits. That is the end of today's class. If you have any questions, you can let me know.
So, donation to Egba Community for Town Hall Development. It's not like hello, sir, can you hear me, sir?
I can hear you clearly.
It's not like corporate social responsibility.
It is not. It is
It's
not.
not. I said not allowable.
Because again, you remember I told you when you are making donation, Fidelis, when you are
And
making donation, the donation that you make must be in line with the act.
Business.
Okay. We have list of bodies that when you make donations to them, those donations will be allowed. When we get the company income tax proper, I'm going to be showing you a lot of things. We are going to discuss donation extensively. Okay, we are going to discuss donation extensively. So this one is not an liable reduction. When you see donation that is going to be allowed, you see that the donation is made to national, so it must have the coloration of nationality in it. Okay, it must be for research. Okay, it must be for welfare. When you make a donation to boys brigade and girls brigade, it is allowed. Boy Scouts, it is allowed. Okay, all those are allowed. When you make it to a professional organization recognized by law, it is allowed. But when you make donation to all these social club, polo club, Ikoyi club, it is not allowed. When you make donation to Nasima, that is a trade organization, is allowed. Chamber of Commerce, all those are allowed. Recognized trade organization is allowed. So they are allowed. So, but when you make mention to all those that are not recognized by law, they are not allowed. Any other question before we call the class off?
Yes, sir. So in the question, we
Yes,
saw
ma'am.
something like public relations and entertainment. I thought you said
Yes.
entertainment is not allowed.
Entertainment is allowed, provided the entertainment is not. When the examiner now goes further by saying it is for wine, liquor, and food, they are not allowed.
Okay.
Entertain your customer. Okay.
All right, sir.
Yeah. Good day to you.
Thank you, sir.
Good day
All
to you,
right.
too,
See
sir.
you on Monday. I'll be the one that will teach you on Monday by the grace of God.
Thank
But
you.
if I'm not able to
Thank
teach
you,
you on Monday, if I'm not able to teach you on Monday, besides we will teach you on Monday. All right. Good day to you guys. Bye.
Good day, sir.
Thank you.
All right.
Yeah, sir, please, the materials.
I'll forward it to you
We've not
guys.
gotten. Okay.
I'll forward it to you. Arab money, you are cited. I greet you, sir.
My brother, I greet you soon.
All right.